Welcome to another episode of the Legacy Builders podcast. I'm your host, Kyle McGee. Fired up for today, we have Mr. Chad King. Chad started out in the wholesale fix and flip space and has completed 368 flips in his career. Apartments were always the end goal, and Chad was able to take his active income from flipping and began acquiring commercial real estate. Titan Capital Group, the holding company, is all about creating and preserving wealth, as well as taking care of tenants, properties, and investors. They seek direct investment opportunities and appreciating cash flow multifamily real estate. Through rigorous analysis and selective location purchases, they achieve their primary goal of protecting and multiplying investor capital. Chad has purchased 26 commercial real estate properties, completed 14 syndications, and has taken 13 projects full cycle with exits. With an average IRR of 28% to investors, Titan Capital currently operates $182 million in multifamily real estate, with the majority being in Middle Tennessee. When he's relaxing, you can catch Chad on the golf course or hanging out with his incredible family. Chad, welcome to the show.
Hey, happy to be here, Kyle. Thanks very much for having me.
Yeah, absolutely. So for those listening, Chad and I go back over a decade. We met at Florida State. Chad was actually the pledge educator of our fraternity when I was a pledge. So Sigma Chi in Hoke and go Knowles.
Yeah, a little bit different dynamic between us 10 years later than it was when we were rushing up fraternity. So yeah, we're in different places in our life. I'm excited to talk about that journey because we both seems like have had a good upward and right trajectory when it comes to financials and business mindset and all that kind of stuff. So I was excited to see you grow as well. And it's good to see the guys that, took life seriously after that debauchery at college.
Yeah. It's sometimes funny, like reconnecting with, I had Gene Whidden on the podcast recently. Okay. And it's funny, like keeping up with kind of like through social media or whatever it is about where people are at, but not really. And then, like playing back in your head of like what you were doing. It's like, thank God I'm not there anymore. you know?
Well, you get guys that are stuck there too. You talk about, just segueing into the mindset thing is like, you look back and some of the guys are, 10 years later and they're still acting and behaving the same way. You find them in the same places, talking to the same people, having the same conversations, drinking the same drinks. And like, they haven't done any growth, no personal, professional. They're just like stagnant. And, if you're stagnant, you're going backwards. So it's good to see the guys that came out of there and decided, hey, I'm going to start moving forward in life.
Yeah, 100%. And, regardless of where people are at in their journey, it takes really intentional. It starts with desire, right? But then you have to get intentional in your actions and everything. So before we get there, I'd like for you to kind of give us some context take us to the early part of your career. What did you first get going with out of school? And then, what are you up to today?
Sure. Well, as soon as I graduated Florida State with a couple of worthless pieces of paper that weren't really doing much for me, I took a job at Xerox selling copiers door to door. So I went to Xerox. I was in Miami, Florida, just knocking on doors, trying to sell copiers. I did that for 2 years, climbed the ladder a little bit. I was a top salesman my second year, but I wanted to control my own destiny. I wanted to have financial freedom. I definitely had more of the entrepreneurial spirit, and I jumped into real estate full time. There were some catalysts for me to make the jump, but I was young and was able to take those risks at the time, which is when you got to do it. And so I jumped in, started getting into like fixing and flipping, wholesaling houses just out of a need to make money to replace the income that I had. And that spiraled. And, then you talk about finding partners and finding the right business partners. I got into business with a gentleman by the name of Bill, and he had a machine and a mechanism with a lot more capital behind it that could do the marketing. I was phenomenal at the sales aspect. I'm very passionate about sales. So the acquisition and sales of properties was really my strong suit. So we blew that business up, took it to 5 markets. We were flipping, in our biggest year, we flipped 168 houses. Some of that includes, wholesale contracts where you put it under contract and flip the paper. So that was all in single family. The problem with it was we created a hamster wheel for ourselves. And I think there's probably some business owners listening that have, built a business and kind of built themselves into a little bit of a prison. And that's what it felt like. It was like we had 14 employees and a bunch of contractor crews, and we were doing, a dozen deals a month. But it was so transactional. Every time we got done with a flip and a real estate deal, like same thing with a commission. If you're an agent, like as soon as you got done with one, you got to go find the next one. And then you got to go find the next one. And there was no residuals. Like there was no, we do a deal and then we get residual. It creates a stream of income. So apartments were always the end game. And I always saw that as the wealth builder. Like people holding real estate were the ones that built a lot of the wealth. So flipping was just a high paying job. Most people who flip houses, they're not actually real estate investors until they take that active income and do what we did, which was start buying small multifamily properties. Also, it alleviated the tax burden that comes with earning, high income. So we started buying, I bought a little 14 unit, then I bought a 21 unit, then I bought a 27 unit. And then I ran into another problem, which was we ran out of our own cash to buy these things. We were buying smaller deals and it was like, well, now we're out of money. But I didn't want to go back into flipping and doing that hamster wheel again because I was like, I don't want to do that to make the money. So we didn't want to stop buying commercial real estate. I figured out the blueprint that somebody had already figured this out called syndications, where you can take people that know, like, and trust you, pool money together and buy bigger complexes. So we did our first syndication was $2.2 million purchase price. We raised $800,000, bought a 49 unit. Then it was like, wow, this works. We did a 65 unit. Then we did a 93 unit, raised $2.2 million to buy an $8 million deal. And so we were like, this works. We're finding good opportunities, good properties in good locations at good bases, focusing on the metrics. And that's kind of the segue. And then we fast forward to today. We bought a 375 unit complex a month ago for, $25 million. And we hold just shy of 3,000 units if you count self-storage and mobile home parks. We have a lot of mobile home parks. We have a lot of self-storage facilities. I say a lot. We have 80% of our portfolio is apartment complexes, C+ class. In Middle Tennessee, our average rental price point's $1,100. Very stable properties, 96% occupied across the board. I don't buy Class A, downtown high rises. My rent's not, $3,000 a month. That stuff can get disrupted very easily. I think that buying what we buy in our vintages is kind of our sweet spot. And we've also, we pepper in some pad rent mobile home parks and some storage too. So that's where we're at. And we operate this portfolio. We still do some other stuff. We vertically integrated too. So we have an HVAC and plumbing business that we own. We own a title company. We own a property management company. After about 1,000 units, it really starts to make sense to start bringing some of these other verticals in-house. When our Roto-Rooter bill is $300,000 a year, I'm like, well, we might as well just own the plumbing company too. So then we expanded and started doing those other businesses that support the real estate. Everything I have is pretty much under that umbrella, and all the businesses talk to each other and support each other. So it's been an interesting journey over the last 10 years getting to where we are. But when you look back, you connect the dots. It makes a lot of sense. We didn't recreate this wheel. We just followed a blueprint.
Yeah, no. That's awesome. And I didn't realize how similar our trajectories really are. Like even when you talk about your portfolio, our average rent's $1,150 here in Pensacola. Our investment thesis was like, hey, we want to be in the best locations and the lowest rent. Why? Because 60-70% of America is right there. Right. And so, these people in BTR getting crushed. There's people in development that are getting crushed. There's capital calls. We're not there, right? Like we are, like you said, 96% occupied. There is a level of execution when it comes to management and construction, right, that you have to be dialed in. But that's really awesome to hear. I want to go back a little bit. So, as entrepreneurs, 10, 12, 15 years, however far along you are in your journey, we kind of glaze over the fact of like, hey, I worked for Xerox for 2 years and I went into business for myself. Like It was just natural. Where did your entrepreneurial spirit come from? Or when did you kind of have that itch or realize that maybe I do want to go work for myself?
That's a great question. I've always been interested in money. And it led me to get those degrees. I got a degree in finance and accounting at Florida State, and because I wanted to learn about money. We live on an economic planet, and I don't think we talk about money enough and how it works, how it operates. And so I just always had a desire to understand it. And I think I got those degrees. I was a little disappointed because I feel like it just taught you how to do accounting for somebody else. And it didn't teach you how to create financial freedom for yourself and how to avoid paying taxes legally and ethically and how to how to play the game. So while I was at Xerox, I was studying successful individuals. I was in that mindset growth. I was listening to the podcasts, I was reading the books, and I was studying all these successful people, peeling back the layers, right? And I noticed that common theme all the time. I kept seeing it, like real estate. Every single wealthy person I feel like I studied ultimately like had a portfolio of real estate that was really the catalyst for a lot of their wealth. And so it's like that bug just kept gnawing on me. And then, I read Rich Dad, Poor Dad, like everybody else. And, you start to understand assets versus liabilities. And I think at some point, I've always been a eat what you kill guy. I've never had a salary out of college. I mean, I was always commission only. Even when I was flipping houses, like there was no base salary. There was no cushy, you show up, trade your hour, and you get this dollar amount. It was always you eat what you kill, which is ultimately the entrepreneurial spirit. And although very risky, to live like that, it also has much higher rewards because you're limitless. Your potential to earn is limitless. So, and I don't recommend people like jumping out of a W-2 job to go become an entrepreneur. Like that may not be the smartest path for you, just because that's what one of us did. Like I always tell people, especially right now, like if you're in a high income earning position, like first you need to look at ways where you can earn more in your current role. Like how can you do what you're doing and earn more? And then maybe start to build a portfolio or buy some other businesses or do some other things on the side, and then work to get those cash flowing enough to where then they can replace your income. I'm very logical in the sense of not everybody's in a position where they can just quit their job and just become an entrepreneur. And honestly, less than 7% of the population is even built to be entrepreneurs, and less than 1% of those succeed. So this is not for everybody. This level of stress that you take on, it is not sunshine and rainbows. People think, oh, you work for yourself, must be nice. No, because this is 24/7. You can't turn it off. You have a 9 to 5, like you can shut your laptop at the end of the day and go home and detach. But when you're an entrepreneur, that stress is not for everyone. And I know I'm tangenting from your question, but the catalyst was ultimately just to create a life by design that I felt like I was in charge of. And I felt like when you're in a corporate structure, a lot of times that path is laid out for you all the way up until you're like 60, 65. And the idea of working in those confines, like just irritated me. I don't like people to tell me what to do.
Yeah.
So that was kind of my
there's a couple things that stood out to me, and I haven't really given this too much thought, but it makes perfect sense about the advantage of starting as an entrepreneur at a younger age. Like when you're not chained to these big bills or kids or a spouse or all of these other things that come with age. Typically, most people don't get married till they're now like 30s, but like mid 20s or whatever. But starting out in sales and then going and work for yourself early, like it allows you to be more nimble. And like if you don't have a huge month, it's okay, because you can go get Taco Bell or whatever, like it's not a huge deal because you don't have these huge expenses. But people, when they have waited till their mid 30s and they're making $150,000, $200,000 a year, well, they probably have a $8,000 mortgage or $5,000 mortgage. They have insurance, they have expenses. Anyone hearing this, like start early. Like you have an advantage when you're young in your early 20s to like mess up and to go learn by doing, so really start early. And then,
but if you can't start early, start
now.
Because
start
if
right now.
You're 35 and listen to this and you're like, fuck, I got 2 kids, and like, doesn't matter because you're not going back. So you might as well get rolling, but do it. You got to be to your point, you have to be much more strategic. When you have overhead and family to take care of, now your decisions have to be more strategic in nature. But don't not do it because you're not 22 anymore. Like you got to freaking go, because ultimately you have to build enough wealth for yourself and your family that, if you lost your W-2 job tomorrow, your assets should be able to pay for your living expenses above and beyond.
100%. Life's too short to be sitting on the sidelines. Like get in the game. There's never a perfect time. There's never a perfect economy, but there's always an opportunity if you want it bad enough, right? Yeah. And if you're willing to take the risk. So one of the things that I think is pivotal to both of our early careers is we were in sales, and every entrepreneur or business owner has to be their biggest fan and be able to sell themselves. Mm-hmm. Talk to me the importance of sales, and specifically your sales experience in your journey.
Yeah. So I'm just writing a couple notes down because I don't go on too many tangents, because sales is something that I could talk about for hours. I think it's something that is very undervalued and it has a stigma around it. And I think people need to just eliminate that stigma, because sales is about solving problems. It's about asking questions, diagnosing, solving problems, and having tactical empathy. And empathy is not sympathy, right? Sympathy is feeling sorry for somebody. Empathy is being able to put myself in somebody else's position and see how they see the situation. And you're not going to be able to solve anybody's problems if you can't ask specific questions designed towards bringing out either pain or a picture perfect scenario that can get somebody to make a decision and then allow you to have some influence around that decision. The sales is literally, you're in it whether you know it or not, or whether you accept it or not, you're actually in it. So to not understand basic principles around negotiations, around empathy, around asking great questions, how to frame questions, like you're hurting yourself and your family by not understanding these basics. The things that I learned at Xerox all the way back and have still apply to me now is, number one is everything is a pipeline. And 9 times out of 10, your issue is that there's not enough activity at some point in your pipeline. So I can track down, for people who are not successful in the commercial real estate, they're like, I can't get a deal. I can't find any deals. I'm like, how many offers have you made? They're like, I've made 2 offers. I'm like, okay, well, like you've made 2 offers, right? How many properties did you look at last week? I looked at 3 properties. Okay. Well, I can track all the way up the funnel to just tell you are not looking at enough deals, making enough offers, and I can work my way down. Everything goes in the top and then out the bottom spits my deals. And 90% of your issues is there's not enough activity at the top. So whatever you think you're doing, you need to do 10 times more, maybe even 100 times more effort, because there are so many people out there that want what you want, that if you're not outworking them and outperforming them from an activity standpoint, you're not going to be the best. You might not be the best, the wealthiest, the richest, the fastest, but you got to be able to take the most action on a consistent basis when you don't feel like it. Because that's going to be the separator, is the people who just keep going until something breaks. And I also see people who get into real estate specifically that they don't understand the concept of delayed gratification, and they want everything now because we live in an instant gratification world. And especially our generation, man, we grew up, I had a flip phone, in high school, but for the most part, we've had iPhones. Our kids, they'll come in and all the information, the generation below us, all their information's at the fingertips. But success and wealth, you have to plant a lot of seeds, and you have to wait years and years and years before those seeds actually come and sprout the surface of the ground and actually give you something to work with. So you have to take activity and action. There's action that I'm taking now that won't pay me for 3 to 5 years, but I'm still taking the action because I'm planting those seeds. And I think just understanding, you have got to have a basic concept of sales techniques and strategies, because everything is a negotiation and everything you want is a commission. And if you start to look at life that way, every relationship, now I'm not saying look at all your relationships on a transactional basis, but look at the conversations that you're having, and the desired outcome is a commission. And you have to sell yourself, your business, your service, whatever it is, your product, in order to get that. So I don't know, it's essential to life.
Yeah. 100%.
And you best study up on it.
Yeah. I couldn't agree more. I love the what you said about planting the seeds. I share with my team the quote, you don't eat the fruit of the seeds you plant today. So you got to always be planting seeds, right? And then it's 100% a numbers game. I want to reiterate that. Like, it's literally about feeding the top of the funnel. I had a real life example of this, and I speak about it often, like the importance of coaches or mentors or the people in your life that can check you and you can get vulnerable with. And we closed our biggest deal to date a couple weeks ago. And like 2 weeks before closing, we were raising $5.5 million. And like 2 weeks before closing, we were at $2 million. And so we had not even halfway there, 2 weeks to closing. And I was still confident, but I had that little moment of doubt that all entrepreneurs have, and self-limiting beliefs. And I was talking to my coach, and I'm like, dude, I'm running out of people to call. And he was like, that's a cop-out. Literally go into your phone he didn't even say much. He said, that's a cop-out. So after that, I was like, you know what? Me and my partner, I was like, hey, we're doing something called the Breeze Blitz. And go into your phone. Like, I started at Z and went to A and put even if they weren't a potential investor, I still would put them on there. And I reached out to like 150 people in 7 days, and we completed the capital raise in 7 days. Yeah. Right. And I've been working on this for 30 days or whatever. So it's all a numbers game. People from the outside like to look and say, oh man, Chad King must be nice, or, whatever it is, like achieving this level of success, but it takes work, right? It takes real energy, effort, intentional, inspired action and work. So don't judge from the outside looking in. Know that most, if not all people, not all because of inherited wealth or whatever, but most first generation wealth creators are extreme action takers, right? So if there's one thing that anyone's listening can take away, it's that. Take extreme inspired action daily, and the results will follow. I want to dive a little bit deeper because this is very impressive to me. So 368 flips. You've currently purchased 26 commercial properties, completed 14 syndication, 13 projects, full cycle, average IRR of 28%. That's a bunch of execution. Like, people don't realize, like, it's one thing to find the deals. It's one thing to find the capital. It's a whole nother thing to perform, right? And like we were talking offline, like, there's a lot of capital calls going on. There's a lot of struggle out in the industry. So to produce those kind of results, there has to be some level of excellence that you're operating off of. Can you talk me through your thoughts on operations?
Sure. Takeoffs are optional, but landings are mandatory. You don't have to buy the deal, but when you buy it, you are going to have to exit. Now, unless you're buying it with your own cash and you're the sole investor, either you have a term on your loan or you're going to have investors' capital that you need to return. And in my experience, I got to turn these things every 5 to 7 years, 10 if I'm lucky. But think about that when you're entering a property. The one thing that I see people are not doing well enough, and the reason a lot of people are in hot water, and you said 26 commercial properties. I'm not batting 1,000. There's a couple deals I wouldn't buy again. I got a couple in my portfolio right now that they're limping along, and I'm funding them, and it is okay. I've never done a capital call. I'm grateful to say that. Knock on wood. But there's a couple that are struggling. So I'm not acting like I have the Midas touch here. I got caught in the craze of 21 where everything looked like it penciled, and I bought a couple that I probably would have said no to if I was focused on my metrics. So I'm being completely transparent. Now, I picked a lot of winners because I stress test the heck out of my underwriting. And I do what's called, I beat it with the ugly stick. Most people are looking at deals with rose-colored lenses. They step on the property, and we're talking specifically to real estate or business owners. By the way, a piece of real estate is just a business. It's an LLC. It's got income. It's got expenses. You just happen to be in the renting homes, right? But if you're a business owner out there, it's the same thing. It's a P&L, and the valuation is based on the net income. Same thing like a driver on EBITDA. So whether I'm talking real estate or whatever, you have got to stress test the heck out of it. Most people look at a real estate deal, they look at a business, and they see all the things that could go right. And they step on the property, and they're like, oh my gosh, look at this building. It's sexy. They pull their phone out. They do a little selfie. I'm on property. Look how cool this building is, whatever. But they don't really get behind the spreadsheets. Like, that is where I'm the most dangerous, and I'm the most valuable to my company behind the spreadsheets. Now, I'm very dangerous in front of sellers and closing deals and all that good stuff. But at the end of the day, the real wealth is made sitting behind the spreadsheets and stress testing. I need to know where my break-even points are. I need to know at what occupancy level do I go into an operating cash flow shortfall. I need to know at what rental rates. Most people are still baking in the same rental hikes that we had, which rent was growing 10% year over year in 2020 to 2022, whatever. And some people underwrote that, continuing that way. And then they got their loan based on that. And then now they're they're giving properties back to the bank because they didn't stress test. Like, I'm buying stuff right now and I'm baking in no rental increases in the next 3 years. Does it still pencil? I'm underwriting deals and I'm saying, all right, I'm at a 96% occupancy rate. What happens if 20% of my tenants move out and I go to 80% occupancy? Do I still cover my debt service? Right? I'm stress testing my cap rates on my exit. Okay, I'm at a 6 cap market, in Murfreesboro, Tennessee, just south of Nashville. It's going to be a 6 cap in, 5 years when I'm exiting. What happens if it goes to a 7 cap? What happens if my sale price goes from 135 a door to 115 a door? What happens to my IRR, my average annual returns, to my investors when those things take place? And I encourage everybody to look at deals and try and kill it as much as you can. And then if the deal really stays alive, when I do my worst case scenario, my most likely case scenario, and my best case scenario, if I'm doing my worst case scenario and it's still hitting those metrics I'm trying to hit, 14% IRR, 6 to 8% cash on cash return, 17 to 20% average annual return, 2x multiple over 5 years. Like if I literally cannot get it lower than those metrics, then that's a good deal and you should trust it and you should do it. But stop looking at the best case scenario underwriting and sending that out to everybody and saying, hey, this is going to be great. We're going to buy it for $90,000 a door in Pensacola. And in 5 years, I'm going to sell it for $190 a unit, because that's a 5 cap. And, it's just, that's where I'm seeing people get into hot water. And I think, the average of 28% IRR for my investors is because I've focused on buying the basis. And right now it is so critical that you buy at a good basis. I don't care if it's a business, a piece of real estate, your basis on your purchase is what is going to make you wealthy. If you can buy below replacement cost and at a really good going in cap rate at a low basis, you're going to be protected because you're going to have built-in equity in that project. All right. And
I have a couple questions there because, we have this balancing act, like what you're sounding, it makes 100% sense, right? Like it does. However, there's a balancing act because you want to grow. You want to do deals. Like you have to do deals in order to grow your management company and the team. And so you can stress test the hell out of deals and make every case, especially right now, about why you shouldn't do a deal. Like I'm underwriting, call it 10 deals a week. And I mean, granted, I'm with you in a lot of this. Like I'm looking at a ton of deals and I'm saying no majority of the time. However, there's this balancing act, like, we've got to grow and we've got to do deals to keep my company alive. Yeah. But I also want to stress test the hell out of it. So where's that balance?
Tricky. Yeah, that's a great question. It is a dichotomy in which you have got to tread very carefully because I've seen that people who are reliant on closing the deals in order to sustain end up doing bad deals just to keep the machine going. And that is a house of cards that will eventually fall. So you don't want to get into a situation like I don't recommend people, just become syndicators, and do real estate because what I've seen is the people who are just full-time trying to do syndications, they have to move from deal to deal in order to feed their families. And that's a dangerous game because they will look at a deal a certain way if the pipeline has been dry enough for long enough. And they will almost force that deal through because they need either the fee or they need the acquisition to get, to keep the ball moving down the field. So I recommend that you have to have a good mix of fast money and slow money. Okay. You have to have businesses that are cash flowing. That's why I said in the beginning of the podcast, I don't recommend people leave their W-2 on a whim because that stream of income is what is going to provide the sustainability. So you can say no to the wrong deals. Versus you leave that and then you're like, I have to do this deal. And believe it or not, that mentality, when you have those cash flowing businesses, it allows you to say no to the opportunities that might be distractions without having to feel like you're pushing one through. And I 100% totally agree with you. We're growing too. I have 4 properties under contract closing next month. I have a 18 unit, 146 unit storage facility. We have a 49 unit and we just closed a 16 unit last week. So we're doing deals and we say no, same as you. I say no to probably 200 deals before I buy one. Yeah. So that's the whole activity at the top of the funnel. But you got to get to a place where you have to be active in the market, but just make sure you're pairing your debt up with where we're at in the market cycle and where you plan to exit. The big thing is just make sure you're planning for your exits, especially if you're using investor funds. So I'm all about doing deals, but make sure where we're at in the market cycle, you pair that up with the kind of debt you're going to get on the product and you match that up with the kind of exit and the timeline which you think you're going to exit. And you can do deals right now. Forget the interest rate. It's crazy. I say that people are like, what are you talking about? Like, who cares what the interest rate is? Focus on your metrics. And I don't care if the interest rate is 4% or 8%. It doesn't matter because it's not real. All you got to do is make sure the business plan covers that interest payment. Yes, you're going to have to adjust your offer. You can't pay the same amount you could pay if your loan was 4%. So don't pay the same amount. but don't not do a deal because the interest rate is 7.5% versus 4.
And the reality is you should probably be buying more deals when the interest rates are high, right? Just due to the cycles of values go up when interest rates go down. So if you can make the deals work when interest rates are high, you should be buying deals right now, not selling deals. So thank you. I have one other thing that you said that I want to push back on a little bit, because you said that spreadsheets are where the wealth is created. I disagree, because I think that really the operational side of like management and construction and like running the deal, like you can buy anything and you can financially engineer. You can make these spreadsheets say whatever the hell you want them to say, right? And you're going to stress test them and do all the things. However, if you don't have the right management staff, the people actually talking to the residents, the maintenance people that show up with a smile and, present themselves in a professional manner, then you're not going to have anyone living there and no one's going to be paying rent. So talk me through your thoughts on operations and management and that side of the business.
Yeah, that's a great point, because I think what you're saying is, to me, you can create a business plan and make the sexiest spreadsheet in the world, but if you can't execute that business plan, it doesn't matter.
Don't mean shit.
Yeah. And I've seen property managers, I've had bad property managers that have screwed up great deals, and I've seen great property managers turn shit into gold. Right. So it all depends on your boots on the ground, because to your point, the execution of that spreadsheet is what matters. It doesn't matter what the spreadsheet says. So you're 100% right. My statement was with the assumption that you have the team in place to execute. So we use third-party property management on about 60% of our portfolio. The other 40% we manage in-house. So we manage all of our storage, all of our mobile home parks, and our smaller multifamilies, so under 50 units. And then we have some complexes. We have some 120 units, some 355 units, some larger projects, and we use third-party property management. And the operations and the boots on the ground will make or break your deal 100%. Who is running it? Who's making the decisions on a day-to-day basis? What is their level of savviness? You have got to interview. Let's say you're just getting started and you're going to pick a market like Columbia, South Carolina. All right. The first thing I'm doing is I'm going into Columbia, South Carolina, and I'm going to interview all the property managers that are active in Columbia, South Carolina. And I'm going to start to build relationships with the property managers, and I'm going to start to build relationships with the banks, and I'm going to start to build relationships with brokers, all at the same time. So you finding a deal in Columbia, South Carolina is, okay, great. Who's going to manage it? And that's the first thing I ask anybody who comes to me and says, I got a deal. I'm like, who's managing it? They're like, oh, I don't have a property manager yet. I'm like, well, you're way behind the 8 ball, because the first thing you should do is know exactly who you're going to call. Tell me what this pro forma looks like. And to your point, I think what we do is we come up with that budget, that spreadsheet that I was talking about, and we sit down with our managers, our asset managers, our property manager. I do all the asset management with my partner, Jason. And then we have property managers on site. And then we have, a leasing, and we have maintenance. We sit down with our property managers on a weekly basis. We go through the assets. We talk about 4 things. We talk about collections and leasing. We talk about delinquents and eviction, delinquencies and collections. We talk about CapEx, and then we talk about open items. So we want to know, obviously, those major 4 points cover a lot of the stuff that we got to talk about. And we get that business plan in place early on, and we get them to agree to it and say, hey, this is our underwriting. Okay, this is what we think we're going to do over the next 5 years. Do you agree with this? Can you hit this? And what is your independent analysis before we even talk about this? Like, what do you think this is going to do? And get everybody working towards the same exact goals and the same budgets. Because then, when you have variance, we meet, every single week we meet, and then we have quarterlies and annuals. And when you have the variance, you can look at it and say, hey, we did a little bit better on income, but expenses were a little higher, whatever it is. Third-party property management's great. You better have a good relationship with your management company. I've seen some bad ones and some horror stories with people who have just kind of think that once you buy a property and you put a property manager on it, like all of a sudden it's a passive thing. Yeah. And it's like, you have got to manage the managers of the assets. Like, I don't recommend self-managing stuff when you're smaller and taking calls from tenants, and you should just pay that 6, 8, 10% off the top and just free yourself up to go do other things, because you don't want to be taking those phone calls when you could be doing higher priority activities. But you also cannot turn a blind eye, because good operations, good management making sure your CapEx budget's not getting out of line. They're not spending crazy amounts of money on unit turns and understanding those basic costs. That's why getting an education is so important. I mean, you got to have a basic education so you know not to be dangerous.
Yeah, so we did a little bit different. We've taken a different approach, and jury's still out if it's the right move or not. Only time will tell. But my business partner and I started a management company at 112 units, and so we manage, and we're at 300 today, and we manage all of ours in house. And at the scale we're at, which isn't very much, it operates in the red, right? Our management company is a net loser, but the value that it drives it's cementing, I hope, our reputation early, because your reputation when you're taking other people's money at the beginning is crucial, right? Yeah. And so it's like, hey, if we can afford to lose a little bit of money and have a killer property management team that can really drive the value and make these investments successful, eventually we'll get to the scale that it'll make sense and it'll be in the black, but we'll see. Right. But it's been a whole different level of management, because when you're managing a manager that works for someone else, that's a different thing. When you're managing the managers that work for you, it's a whole different level of accountability and responsibility, and discipline and focus. So only time will tell there. But I want to ask you, you just mentioned your partner, Jason. What are y'all's two roles within the company?
Yeah. So him and I are 50-50 on we have the HVAC and plumbing business, all the other businesses too, and all this real estate. But we're 50-50 partners. We both share in all the risk with regards to guarantoring the loans and the balance sheets and everything like that, which makes for good partners when your ass is on the line along with them. So we both share in all that. And then he is the way I like to think of it is I'm focused on income, he's focused on expenses. So he's very much operations driven and really focused on that net operating income line and driving the expenses down where they can. A lot of people, they're so focused on getting, the most rents coming in the front door, but meanwhile, the back door's wide open and there's just a ton of expenses flying out the back that they're not even paying attention to. Software costs, like just things like that. So if we had to split lanes, like I'm more like acquisitions and he's more like operations and expenses. Now we both do a good amount of capital raising. And we both share. I mean, there's so many roles that blend over. We both do a lot of the asset management. It takes a village. I mean, when you get to, this, I mean, when you have there's a lot of stuff to do. Mm-hmm. And he has his own team. I have my own team. When it comes to partnerships, I highly recommend you date before you get married. Do a couple deals with somebody. Make sure your core values align. And I don't know if you were going into the partnership segue, but I think it's really important because I do believe that you cannot do this alone. You will literally be your own bottleneck. And if you want to have some sort of scale, you've got to partner with somebody. And I've had good partners, bad partners. I've bought partners out. I've had, all the stories. This one that I have now has been tried and true over the last 7 years because we started off with a couple deals. We like the way each other works. We share the same core values, which is probably the biggest thing, is just making sure you have that core value alignment, because a lot of the other stuff will work itself out. If you have integrity, you guys are good stewards, you focus on results, you can work the other stuff out and go deal by deal in the beginning. And, even to this day, like I have my own entity, he has his own entity, Urusi Holdings, I have Titan Capital, and we start an LLC for every property that we buy, and then we each go into that one, individually. So we still to this day don't have like a master, you don't need to meet somebody and just start an LLC and just go 50-50 and buy properties. Like you can just do it as yourself and just do a couple deals with somebody and make sure that it feels right, because these things are marriages and they're very difficult to unwind. And if you're buying real estate, it's not a liquid asset. So, especially these commercial real estate, these apartment complexes, whoever you buy this deal with, you're in bed with them for 5 to 7 years, whether you like it or not. So, just be selective with who you do business with.
Yeah, no, I think that, I was going to ask about the difference of, your take on building relationships versus these key relationships, right? These business partners or, major investors. But I think you hit the nail on the head, right? Date before you marry is so key. Do something small before you eat the elephant, right? And similar to you, me and my current partner, we did a flip in a one spec home. right? But we worked hand in hand for 6 months. We saw how we operated. We bought a 14 unit. And then next thing you know, it's like, okay, you grow together. But another one of your points there's biblical verse about, two-stranded or three-stranded rope is hard to break, right? And it's just showing that, like, to do these things that you're trying to do, the importance of bringing others with you, like having someone to call and vent to when shit's hitting the fan or things aren't going plan. Like when you try to do something solo, man, that's a big burden to take on yourself.
Yeah.
Couple more things I want to hit during our conversation. There's typically what I'm finding when I'm interviewing these high performers, these entrepreneurs that legacy builders, right? That's what the show is called. These legacy builders. There's a couple habits and mindset beliefs and discipline that it's like a reoccurring theme. What are the habits that you've built your foundation of success on?
The habits that I've built my foundation of success on. Okay. I love podcasts where I don't get the questions before because like my
organic.
Yeah. Sometimes the people will send you the questions and it's like, it feels very scripted, but I like the ones where I don't get the questions. The habits, just like some little ones that come to mind, man, is honestly just writing things down, like spending time writing things down, planning out your day and not letting the day take you. And I think now the days are filled with craziness, hecticness. You wake up and by 8 a.m., like everything is already starting to blow up. But I have usually 5 critical tasks that I know need to move the needle for that day. So understanding that you're not gonna move that mountain one day, but you just got to make sure you pick up a few rocks and do that consistently over long periods of time. And then all of a sudden you pick your head up 5 years later and you're like, holy shit, look what I've built. Because I just was focused on picking up one little rock, a day or, a couple of them a day and just moving them over there. So focusing on being able to zoom out and look at the macro and look at the vision and cast a vision of where we're trying to go. And then look 5, 10, 20 years, what do I want my business to look like? And then being able to pull that vision back so much so that, like I say, all right, if that's got to be true in 5 years, what has to be true in a year? And if that has to be true at the end of this year, what needs to be true at the end of this quarter? And then what do I need to start doing today? And so much so that you can even say, what do I need to stop doing today that's not in service of that vision? Because I can cast this ginormous vision, and you should dream freaking big, make big, hairy, audacious goals, but also make them smart, specific, measurable, attainable, realistic, and timely. And if you follow those 5 principles and make your goals specific, measurable, realistic, attainable, and timely, and you bring it back, you can literally just have a plan for your day before you even start it. And just know that if you do those things, you will move the needle just a little bit. And I think that is consistency and effort beat talent every single time. And there are so many people, to your point, sitting on the sidelines, waiting for rates to drop, or they're just doing another mastermind, or they're going to download another free ebook and just looking for the next piece of information. And successful people just go. They just freaking go. And they learn from their mistakes. They only make them once. You only make the same mistake once. But I put my head down for 90-day spurts. I would just freaking work. And then I'll pick my head up and I'll look and say, all right, where do I need to course correct? What worked? What didn't work? What do I need to eliminate? What are we doubling down on? So just putting your head down, taking consistent action, and then picking it up to course correct over time. But everything else is all the success mindset stuff. It's all pretty cliche. You just got to just do it, do the work and remove the limiting beliefs in your mind that this is not for you, and have an abundance mentality. And
I think that, what you just said is what the 1% do that the rest of people don't. Right. And that's just it can be, 1 or 2 hours of intentional time of where am I going? And hey, you can change your mind, right? Revisit it. And then you sit down and review your strategic plan or your long-term vision or whatever it is. And it's like, well, I just had a kid. This isn't as important to me. Like I wanted to get my private pilot's license. I had 50 hours of flying. I just had a kid. And then it's like, wait a second, I don't care about this that much anymore. So you can, but you have to carve out the time because life is busy, right? There's a million different things that going on outside these walls and these phones to take your attention. But if you're not intentional about where you're going, then you're just mindlessly living someone else's dream, right? Or peg in the wheel. So I think
Yeah.
there's a lot of wisdom in that, and it is what the successful people are doing that the others
You
aren't.
raised your phone up, and there was one thing that's been a couple catalysts for me, and it's changing your algorithm. And I think there's so many people that are caught in these echo chambers and these algorithms, mainly on social media and their phones, and it keeps them in this cycle because they go and they get into these echo chambers and just see the same information, and none of it is in the spirit of where they want to go. It's all in the spirit of where they've been. And they make decisions to appease people that they don't even care about anymore, or they're afraid of judgment from people that they wouldn't even trade places with. You got to take advice from people that you would be willing to trade places with in that specific area. Far too many people who want to be successful are getting advice from people that are not successful. And you have to look at that and just understand that if I would not trade places with that person, then I shouldn't be taking advice from them. And the sad thing is, the tough part for a lot of people is a lot of times that advice comes from loved ones, it comes from friends, it comes from family, it comes from their mom that just means all well from them, but wants to protect them from risk. So tells them not to do something. And then these people listen. So you have got to change your algorithm and who you're listening to, get into different circles. Successful people are always reaching up. It's one hand up and one hand down. They're reaching down to help other people like you are doing on this podcast, like I'm doing with my time, but they're also reaching up and looking at what people are doing at the next rung of the ladder, because you get paid in proportion to the difficulty of the problems that you solve. So if you want to make more money, solve bigger problems. Okay. And successful people also, they will be successful to the level in which they can tolerate risk too. So strategic risk taken in the right places at the right time will determine how successful you are, as well as solving bigger problems with your time, because you have got to get out from a place where you're not trading an hour for more money. The problem that people get is they get into this paycheck to paycheck thing because they trade their time for a dollar amount, and then they think success is trading their time for a higher dollar amount.
Yeah.
And you're never going to achieve financial freedom that way.
Yep. Yeah, no, so good. We could hit on a bunch of things right there, but I want to transition. The show's called Legacy Builders. So I'm curious as to Chad King, when he's at the end of his journey, what do you want your legacy to be?
When I'm at the end of my journey, like the end of my life?
Yeah.
I'm kind of nervous about the world that my kids are going to grow up in. Honestly, I'm trying to shield them from a lot of stuff. And, I'm also trying to, integrate them in a good way with the world, but also make sure that they have every opportunity that I had and even more. I'm trying to be a good husband. I'm trying to be a good father. I'm trying to be a good son, good brother. There's all these different hats that we try and wear. And it's challenging because it's very difficult to feed all of those at the same time. And I think success to me looks like you achieving your potential and what you were put on this planet to do. And when you get to the end of your life, you meet the version of yourself that you had the opportunity to be. And those two people aren't strangers. That's my biggest fear, is that I get to the end of my life and the guy that is everything that I could have been is a complete stranger to me, because I chose to take the easy path. I chose to not do the hard work. I chose to take shortcuts. I chose to be lazy. And I have brief moments of those, like where I and I'm not gonna lie to you and say that every day you wake up just feeling like, let's go run through a wall. To be honest, the majority of the time you don't feel like doing it. Like a lot of times it sucks. And I just want to get to the end of my life and realize that, I achieved the potential that I had here on this planet. And I also left a lasting impression on my children and the people around me, that I left a positive impact. And I gave people the tools and the resources to have freedom for themselves, because I think freedom is the thing for me. That word keeps coming up in my life often. And it just means I want to be able to do what I want to do, when I want to do it, with who I want to do it with, for however long I want to do it. And that includes giving and being generous and all those things. But we live on an economic planet. So you got to build a legacy of wealth that will allow you the freedom to do what it is that you want to do. Because ultimately, getting out of the financial matrix is step one to leaving a legacy, because you can't leave a legacy if you're stuck in a financial matrix that was designed by somebody else to keep you oppressed. And so my first step is to get out of that. And I'm not there yet. Like I'm close, but I have probably another 4 or 5 years of seasoning on these things. And I'll be in a position there where my passive income far exceeds any expenses that I could possibly have. And I'm out of the so-called rat race. And then I think is when you can really start impacting the world in a positive way. And I want to do that. I have some political aspirations, assuming that the current environment changes, or I might have to do it myself, but we'll see. So I got a lot of things to say about that. But I mean, dude, you just leave the world a better place than you found it. And if we all start doing that, it would look a lot different.
Yeah, I love it. No, that's inspiring to hear, because, you said something in that it's not easy, right? You don't feel like doing it, but if your why is great enough and you have built out the things and the people around you, you find another gear, right? You get up anyway, you do it anyway. It's become these mental models that you've built your life around to where, and the most successful people aren't any different from everyone else. You have the limiting beliefs. You have the don't feel like times, like the unmotivated times, but you do it anyway. And so that's super powerful. I'd love to hear more about your political aspirations.
Right now?
I mean, right now for like a couple minutes, because that's news to me. And what are you trying to be, the president?
No, I mean, I got my sights set on governor of Tennessee. I think the states are going to be most powerful. The governors are going to be the most powerful at some point. I think the federal government is a hodgepodge of corruption and bullshit. I think both sides of the aisle are bought and paid for. I'm not a Republican or a Democrat, for those listening. I'm pretty much down the middle. I do think there's 70% in the middle that are just really tired of this whole pendulum, this violent pendulum swing, which is like from left to right every 4 years. And this whole two-party system is just completely antiquated, and it's just been so corrupted over the last 30 years that I think it's impossible to just – I think we have to start over. And I think there's a movement that is neither Republican nor Democrat, and it's just for the people. It's just a for the American people movement. And I think it captures probably the majority of people that are just in the middle that just want to stop the massive – the Republican and the Democrat party – just they're controlled by the furthest sides of the aisle, like the furthest 15% and the furthest 15%. And then we're stuck in the middle, just violently watching this pendulum swing back and forth. And that system is going to run the entire country into the ground, and it will eventually end up popping the debt bubble, which would create massive depression for a lot of folks. Now, we have a small window, I believe, in the next 12 years to potentially fix it. There's going to need to be a lot of reform from an education standpoint. I think our education system that's where it starts, because we're teaching people. It's based on a 1913 Prussian model, which teaches people to be employees. It doesn't teach critical thinking or how to think for yourself. It just teaches you to sit down and do a task for 8 hours, which was designed during the Industrial Revolution. And it's the only thing that has not changed over the last 120 years. So we got to reform that. And then we have to reform the current system. The problem is it's just so ingrained in the foundation of the country right now that it's going to be very difficult to pull out. But I think the federal government is one of the biggest things that's going to hurt the legacies that we're going to be able to leave our kids, because it's.
So I love hearing these big like wild dreams that people from the outside might think are crazy, like, and you're living it and you're speaking it. So one day to be the governor of Tennessee or whatever it ends up being, what are you doing now to plant those seeds that it might be 15, 20, years down the road?
Yeah. Well, first thing I'm doing is speaking it into existence, because I had a conversation with somebody and it came up and they were like, oh, well, I know this guy in Nashville, he's very well connected politically and he could introduce you to somebody. So I think the first step is just to start talking about what you want. And then you'll realize that the doors will start to open that you didn't even know were there because you weren't speaking it into existence. And I think as wild as it sounds, like, you have to just put it into the universe and then let the universe do what it does. And you do have to take positive action in that direction. To answer your question, what I'm doing now is I'm building up a fortress so I could be unfuckable with.
Yeah.
I don't want to get into that sector if I have a need for money, because then I feel like that's why a lot of people are where they're at in Congress and just lining their pockets because they got into it for a paycheck, or they're able to be bought. The one thing that I do like about Trump, I'm pretty critical of him. But the one thing that I do like about him is I think that he had a financial fortress, so he didn't go into it trying to get rich. And I think that's what I'm working on now. So to answer your question, I'm trying to build up a fortress so that I have enough money that I cannot be bought. Morally, I have a good moral compass, so I wouldn't be worried about that. But I don't want to have to lobby for stuff that I don't really believe in because I need the funds.
Yeah. No.
I'm building a real estate portfolio so I can be unfuckable.
That makes sense. I love it. Last topic I want to talk about, and we'll wrap this up. You have young kids, you're a dedicated husband. How do you balance, and you touched on it a little bit in the legacy question about how difficult it is to do all of these things and do them all really well. How do you balance your family life with your big ambitions and aspirations in business and all the things?
Yeah, forget the word balance.
Yeah.
It's always going to be out of balance. There's no balance that you're looking for. What you're looking for is harmony. Okay, it's called work-life harmony. And if I'm talking to the entrepreneurs in the world, in the room, or that are listening, you have got to make it so that everything works together and it's all one harmonious life. Your kids, your business, your wife. Like my wife works with me now in the office, and it's just one thing that we're doing. We're just doing our life. I just happen to be doing real estate deals, and that kind of stuff. But I think people are trying too much to find that balance. It's actually hurting them because they think that, oh my God, I'm really slacking in the father bucket, or I need to be at work more. I need to be at work till 6. Like, I think you just need to find a nice harmony where everything is working together, and you can do it all. And it's possible. You're going to struggle with it, but try and get out of this mentality of where you have all these different buckets and you constantly have to fill up each one, and instead just merge everything and try and find the life that you design that works for you, that incorporates all of the different hats that you have to wear. And it's sort of this one harmonious thing.
I love it, because in different seasons of life, it changes, right? When your kids are certain ages, like they require X amount of time because they go to bed at 7, and then you're going to have sports, and then you're going to have this. And so coinciding it to where it's not like a drag to do one or the other, and it all goes together. It makes perfect sense. And that's a great answer. Last 2 questions. If you were talking to Chad King back at Florida State, 20 years old, what piece of advice, one piece of advice would you give yourself at 20?
Buy Bitcoin. No, I mean, I've gotten this question before, and you always say that every decision that I made and every decision anybody's making is leading them exactly to where they are now. And you're just a sum total of all your previous decisions. So I don't regret any of them. All of them were necessary on my journey, but I would probably tell myself, I was fortunate enough to meet my wife, at 22, and got serious about my life early. And I've spent the last 12 years really just focused and building. And I think that was a big catalyst. I would also say that I would have bought a lot more real estate early on. I would have skipped the single family stuff. I would have gone straight into commercial real estate. I think I wasted, those were a prime 4 years, and I was flipping. And if we had just held on to half those properties, or if we had, bought more of them. So get into real estate, buy real estate and wait. Don't wait to buy real estate. So I would have just basically told myself, hey, this is where you're at, but start a little sooner because you'll be a hell of a lot further if you do.
Love it. Love it. One book that every young aspiring entrepreneur should read.
Extreme Ownership, if you haven't. That is my one book for entrepreneurs. And then for sales, Never Split the Difference is a great one. If you're looking for sales stuff, anything by Jeb Blunt is a good on sales. Because we talked about sales a little bit. You need to study up on it, read some books on it.
Yeah.
But Extreme Ownership is probably the best book.
Great book. A lot of it's probably geared more to men because there's a lot of war stories into it, but great book for sure. Well, this has been an awesome conversation. Appreciate you coming on. If people want to get a hold of you, how can they reach out to you?
You can catch me on Instagram. I'm Mr. Chad King, Mr. Chad King on Instagram. I'm also Chad King on Facebook, so you can reach out to me there. I got to get better at posting and stuff. I'm just busy doing it. I don't talk about doing it too much. I'm just in it. But if you shoot me a DM or something, I'll see it. Yeah. And I love to talk shop. You got a real estate deal. I love to just talk about life. As long as you're moving forward in the right direction, like I'm happy to have a conversation with you if you're trying. I want to help.
Yeah, I love it. And we'll put a link to that in the show notes. And thank everybody for listening. Thanks again, Chad, for coming on. I know that someone out there in the universe got something out of this. So appreciate you. Deeply grateful for our relationship and look forward to seeing all that you accomplish.
Appreciate it, Kyle. Thanks very much for having me. Good time.
Thank you all for listening. Catch you next time.